And welcome to this episode of the Capitalized Life and Retirement Show. I'm your host, Matthew Johnson, president and owner of Johnson Wealth and Income Management, a retirement income source located in Clear Lake and Humboldt, Iowa, serving clients in northern Iowa and southern Minnesota. Well, how are you today? I hope you're doing well, taking a little bit of time for yourself. Let me start out today's podcast by asking you a very genuine question. I want you to think back in time with me. Go back to your childhood. Did you ever have a parent or grandparent or maybe just another adult look at you and go, you should know better? Well, I know when I was younger, I received a few of those, and I guess more or less, if truth be told, it was probably true. I did know better. The reality, however, is that sometimes, even as adults, we simply don't know any better. And it's not the things that we know that hurt us, it's the things that we don't know. So today I want to take a little bit of time and share with you a couple of areas that I see people get stuck. You know, oftentimes it's our earliest experiences that set our paradigm. And maybe you had a bad experience and you were broke once and you vowed never to be broke again. Maybe you went through a divorce and lost half or lost everything. And you're like, I'm never going to be there again. Maybe you lost an absolute ton of money in the stock market and you just don't trust it anymore and you refuse to be a part of it. Whatever that experience is, we've all had it, we've all been there, but sometimes it can force us to make decisions and ultimately we can get stuck not realizing that we really are there. Now, if you're brand new to today's podcast, I want to just say welcome to the program. If you've been looking for something that's down to earth, it's practical, maybe it's a little challenging, maybe it's a little daunting, maybe I'm arguing a point that you've never seen that side of the argument on. If you're here to become educated and better understand what it takes to be successful in retirement, well, welcome to the program. If you like to be able to find financially relevant topics and read up on them, I encourage you, go to our website, johnsonwim.com, where you can find past radio shows, you can find the YouTube videos that we post, you can find white papers that are written to address various different topics. It could be Social Security, it could be estate planning, it could be finding the right advisor when you make that transition into retirement, it could be RMDs. It's countless topics that you can have information on. And if you're the person like me that you like hard, tangible things you can hold in your hand, well, I encourage you, get a copy of my book, The Capitalized Retirement. It's available at any of the major book resellers. So let's get into today's topic. You should know better. I guess it's something that I've heard before, but I had a recent experience where I was working with a gentleman. He was in his mid-70s. He's already been taking required minimum distributions for a couple of years. And he was about to marry one of my clients, actually. And so she had suggested that he would go and he would have a conversation with me. And the reality is that in this particular case, we know that we can be doing certain things for so long that it just becomes our nature. It just becomes a part of our identity and who we are. And many years earlier to this gentleman had gone through some difficult times. He was a business owner. He didn't make a lot of money. He ended up getting a divorce and losing part of his assets to that. But somewhere along the line, he was put into a position where he made the decision, a conscious decision, to invest money into an IRA that was investing in precious metals. Now, precious metals happens to be just one of those topics that I find is it can be very divisive. Either individuals are going to vehemently defend it or they're going to be vehemently against it. There doesn't seem to be much middle ground. And the reality is that precious metals investing is just that. It is a diversification. It's another way to make money. It's another way to risk loss on your money. It's a diversification. What can I say? It's the way that it is. However, in this particular case, 100% of this gentleman's retirement income or retirement resources had been invested into this precious metals portfolio. He really had managed it. It had managed itself over the course of 20, 25 years. And of course, as of late, he feels terribly vindicated, right? Because the market, the commodity market, the precious metals market had absolutely done fantastic. It had gone up, and he was actually more than double in value in just the last year or two. However, this is where things got interesting, because in this case, he knows that precious metals doesn't make interest and dividends. He knows that precious metals is a commodity, and therefore it's volatile. He knows the precious metals doesn't always go in one direction. It retraces. And in fact, just in recent weeks, he had seen a 30% loss in the portfolio. And so, quite honestly, it's not much different than stock in its behavior and what it does. But remember, this is a gold IRA. This is a silver IRA. This is something where he doesn't have the gold, he doesn't have the silver, he doesn't have custodianship of that. He just simply has this on paper, and he's paying for all of the housing, he's paying for the custody of those precious metals. So, when I asked him, well, what are you going to do when the market's down? What if you haven't taken your required minimum distribution? Now it's at the end of the year. The RMD is still due, but now gold and silver are down. What are you going to do? Are you going to be okay selling at a loss? And the answer is, well, I guess I'll have to be. And I said, well, let me ask you a question, because I don't know that I buy that. If there was an alternative, would you still want to sell at a loss? And the answer is, well, of course not. Like, duh. I agree. If there was any other alternative, you would prefer not to sell at a loss. And yet, this is essentially what lack of diversification looks like. You see, lack of diversification puts you into a corner. It paints you right into that corner where if there's something bad that occurs to that one asset that you invest in, I don't care if it's classic cars, I don't care if it's stock, I don't care what it is. It could be any number of things. But if that's the only thing that you're going to invest in, because that's the end all of investments, well, not all investments continue to go onward and upward forever. In fact, most don't. They have jagged lines, as we all know. They kind of start here, and then they work their way up, and then they work their way back, and then they continue onward and upward forever. So the question becomes, because you have a lack of diversification, you realize that you're stuck. You realize that it's a possibility that you possibly could sell at a loss, but yet you're telling me you don't want to do that. And this is where the question that he asked was so relevant. He said, well, Matthew, I just don't know what else to do. What could I do? I don't trust the stock market. I don't trust the government. What could I do? You see, my friend, that's the question we need to be asking ourselves. When individuals own nothing but real estate because they've bought into this idea that there's nothing better than real estate, and of course many people are very realistic with themselves. They say, well, I understand that, real estate's not going to go up forever. I understand we could have some bad times in real estate. Well, I'm glad you do, because we will. And the same thing is true for stocks, and the same thing is true for any number of different investments. But now understanding that if he's sitting with a 100% capital gain, that he essentially could sell a portion of his precious metals and have no taxation. He could sell a portion of his capital gain and he could have no real consequence. He could diversify. Well, now all of a sudden, he realizes that the only thing that's really been holding him back from doing that is the fact that he just simply does not know what he doesn't know. And this, my friend, is where all of a sudden our minds begin to expand. Our horizons begin to get bigger. And this is where we think, okay, well, what is my priority? Now that I'm 73, now that I have these things called required minimum distributions that are going to be with me forever, I need to transition a part of my money so that now my money is going to be producing a known return every single year, regardless of whether it's up, regardless of whether it's down. What does that look like? What does that mean? Well, my friend, what that means is interest and dividends. And you see, the beautiful thing is that this gentleman doesn't have to completely get out of gold and silver. But remember this. Now, I know that this is very crude, but remember that pigs get fed and hogs get slaughtered. Yes, of course, the gold and silver market could continue to go onward and upward. And if he sold a little bit now and took his winnings off the table, he might totally regret that and say, well, that was just a waste. See there, I could have been a part of that continual growth. But are you telling me that there's no other place outside of gold and silver that has the potential for growth? And of course, the answer to that is that's not true. We know that. And so all of a sudden, he began to realize that if he really does care about gold and silver, he really thinks that it is the best. What he wants to do is he wants to diversify so that he puts less pressure, less cannibalization pressure on that gold and silver. And for him, what that looked like was taking a portion of his winnings and moving it from a bucket of high risk in precious metals and becoming a little bit more conservative and putting it into things that produce for him 5 and 6 and 7% in interest and dividends. Things that would produce for him a known return of income every year, regardless of whether those instruments were up in value or down in value. He knew that they would be producing the income. And here's the interesting thing. Because they were producing way more in excess of interest and dividends than what he technically needed in RMDs, it then allowed him to take the excess income that these things were producing and use it to help satisfy the RMD on the precious metals, the gold and the silver that wasn't producing any income. And therefore, he didn't have to sell as much, hopefully any, but we all know that that's not very likely. So sometimes adults can look at us and say, you should know better. But you know what? I empathize with you. Sometimes we don't know any better. And we don't know any better until someone shows us. We don't know any better until we ask questions. And so I encourage you, if you feel like you've gotten into a situation, whether it's real estate, precious metals, whatever it is, and you're just feeling stuck and you feel like you're trapped by taxes or you're trapped by ill consequences, or maybe you're down and you just think that there's no way you'll ever recover. This is where I encourage you, get with a financial advisor, get with a fiduciary, explain your situation. 2 heads sometimes are truly better than one. I'm Matthew Johnson. Thank you so much for listening and watching. And remember, it's up to you to make today a great day.